MyPatriotSupply.com.
My name is Whitney Allen. I am a widow. My husband Ryan died. We never thought in a million years we'd have to use life insurance. The unexpected happened. With Ethos, it is so fast and easy. It's 100% online. You can get a quote in seconds, apply in minutes, and get same-day coverage. No medical exams, and you can get up to $3 million worth of coverage through Ethos.
Get your free quote at ethos.com/term. That's ethos.com/term.
Time spent on application may vary. Online health questions required.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, James. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio
Here
Network.
At the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts and the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit DAV5K.Boston to show your support today.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that, but we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here on Friday the 12th. We almost had it, but in any case, we're here, and we've got some stuff to talk about. Some of it involves money. Some of it involves
finance. Money talks, baby.
More money. And we're going to kick things off with a talk about a company that's currently worth less money than yesterday, and that is Broadcom. They reported earnings after the bell yesterday, and again, kind of like we've seen from a couple of these semiconductor companies over the course of the quarter, the actual numbers weren't bad. But there's some stuff maybe just that is spooking investors about what the future looks like. And so Broadcom stock, which was down about 5% after hours and pre-market, now sitting here today down almost 10% on the day. Discuss.
Yeah, so I think what you mentioned there earlier is really one of the big takeaways is that the bar for these companies that are tied to the artificial intelligence business is really high. The hurdles have been raised to a significant level. To be clear, Broadcom was up 61% year to date. So important to kind of put that context. It had swelled over $1 trillion.
It's been a solid year for them.
It's been a really good year for them. They've exceeded $1 trillion market cap. So things have gone quite well. I do think what you were mentioning is the reason for some of the sell-off today is investors are a little bit jittery. They're expecting the world. And these numbers, like you pointed out, were tremendous. Some of the reasons that I'm going to highlight as the potential investor concerns that I am not overly concerned about, but just to get a sense for why we're seeing the sell-off could be, and this is just theoretical, they did mention in some of their guidance that they expect a little bit lower margins going forward next year, losing 1% or so on the margin business. As they create more and more artificial intelligence chips on the design side, those are lower margins than some of their legacy businesses that we're more accustomed to.
Yep.
Your phone chips, Bluetooth, etc. Those are a little bit higher margin than some of these artificial artificial intelligence ones. Another one, and this one is not something that they mentioned in the earnings call, but something that has just been sort of in the investment ether over the course of the last few days or so, is Google. They have the TPU chips, which we've talked about on the program before. They are probably the biggest competitor to NVIDIA's Stellar chip that goes into all of these data centers to power ChatGPT and all artificial intelligence models. Broadcom is the one who designs those chips for Google, and they take a pretty healthy margin out of that design effort. They did get the next contract, so Broadcom's still in line to work side by side with Google. However, Google is exploring working with potentially other designers out there for future generations of their chips. Perhaps that is some of the concern that lingers out there, that Google is really scrutinizing ways, like all these artificial intelligence companies, to reduce their reliance on companies like Broadcom so that they can be as efficient with all of the costs that go into this development of artificial intelligence as possible. So those could be some of the reasons why you're seeing a bit of a sell. I do think from a longer term perspective, we're going to get to a point with these models, Chucks, where they are going to become so sophisticated that the training exercise is going to be less and less necessary. And NVIDIA is really behind a lot of the training, just how powerful their chips are. And there will be an opportunity for companies like Broadcom to design other sorts of chips that are going to be sort of lesser versions or not as powerful as NVIDIA's chips. So from a longer term perspective, I don't think that this earnings is, dramatically bad, but it's just reflective of sort of a high bar environment that we're in.
It's a company that's trading 39 times forward earnings, 20 times forward sales, and has margins right now of 40%, which is not the norm for computer hardware. Like, you just, again, this stuff all gets commoditized, and I want to make the case right now that what we are seeing in the last 3 or 4 months of this year is that commoditization process that's happening. Tucker, can you fire up the time machine?
Stand by.
I want to take us, make sure you give it enough fuel. We're going back to 1995. All right, it's 1995. Microsoft has released Windows 95. And everyone is getting all happy on, the very start of the tech bubble. And the thing that we had seen over the prior, 5 or 6 years in the tech space, the 90s were the decade of the PC rollout. That was the dominant feature of tech in the 1990s. And specifically, all of the IBM-compatible PCs that were running Windows. And originally, in the 90s, you had a couple manufacturers that, hey, they'd have, an annual release, and here's, our computers for the next year, and then, okay, here's our next ones. And basically, in the mid-90s and 95, everything changed because a ton of money poured into the space, looking at the margins that were there, and you got all these companies that just started trying to make PCs because they saw all the money that was being made. I mean, you're talking, you had, Dell, HP, Compaq, Gateway. I can't remember. There were dozens of them out there. And basically what ended up happening, in order to compete, they started moving to faster and faster releases, so updating their catalog more frequently. They started cutting pricing, and in the end, most of those companies ended up either having to merge with other ones or they went out of business. Mm-hmm. You look at who actually makes IBM-compatible, Windows-compatible PCs these days, there's 3 or 4 names that are left. They either absorbed the other ones or the other ones died off. That's just kind of how it went. And I just look at the last month now, and, Google comes out with its new Gemini and says, oh, this is the best model ever. And then yesterday, OpenAI says, no,
5.2's here, baby.
5.2's here. We ran our Code Red, program for the last few weeks because, Sam Altman ordered the Code Red. And, hey, this is even better now. And ultimately, what this is in my mind is, hey, these companies are now having to actually compete on product, which means that you've got to do it cheaper, faster, and better than the other guys. And that is how commoditization happens. This is ultimately a good thing for all of us who may use these products.
Definitely.
Unfortunately, for the companies that sell them or that sell the hardware that goes into them, it means that those margins are going to have to compress because you have to do more with less. You have to compete. And in doing so, that's what typically happens. And so I think that's kind of one of the other realizations that is creeping in now, which is, hey, if there are going to be multiple ways to do this using multiple technologies and needing to actually compete to win market share and not just being like, hey, OpenAI is the only game in town, man, that's a competition that normally compresses margins, and margin compression means less profit per unit sold, and now you got to make it up on volume.
Yeah, exactly.
And that's where we are, I think, in the early stages of realizing. And the problem here is, and this is why Oracle got bludgeoned yesterday. Here's the deal with the two ways that you can finance this. You can finance this through equity, raising equity, in which case, hey, if someone invests in your company and you're the winner, okay, yes, there could be untold trillions you could make. And if you invest in the loser, then you lose your money, and that's it. That's fine. But ultimately, if you pick 5 or 6 AI companies and do equity investments into them, you could say, yeah, I could do pretty well because that one winner is going to make me a bunch,
right?
And who cares what happens to the losers? The problem is that a lot of this financing is now starting to happen on the debt side of things, and debt doesn't have that upside. If you lend $1 million to 6 companies and 5 of them go belly up, you don't look at the winner there and say, well, my $1 million there turned into $6 million. No, you lent $1 million, you get back $1 million with the interest, but it's not going to be that. It's not going to be enough. So what the market, I think, is also waking up to, and this was the case of Oracle yesterday, is, hey, you're raising an awful lot of debt to try to do this, and you may not be the one who ends up winning, and your debt costs are rising. Your CapEx is rising as a percentage of revenue. Your depreciation is rising as a percentage of revenue. And you got to start selling some more stuff. Otherwise, this is going to be a problem. And so these are the realizations that the market is having with AI. These can be solved, but it's going to take a lot of sales growth in a short period of time, or a pulling back of some of the CapEx plans.
Which I don't think that's going to happen in any case, really.
I think you got to go full steam ahead because the only way out is through.
Exactly. If you don't do it, you're probably likely to crash and burn. So you may as well burn the boats and just give it all you got. And Oracle's case, make it up on volume. That's what you have to do.
The next 2 years are going to be wild on this. Yeah. And it's these are the 2 years where it's going to start to matter. And we're going to see the actual winners and losers decided in 26 and 27, in my opinion. Let's take a quick break. When we come back, that's enough AI for now. Let's talk a little bit about how resilient the U.S. consumer can be without a job. Let's do that when we return.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. There's still time to book your holiday vacation to St. Croix, St. Thomas, or St. John. Enjoy one or all three, and if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment. Or just go soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your winter escape now at visitusvi.com. That's visitusvi.com.
Piece in Bloomberg, opinion by Connor Sen. It's titled, How Resilient Will the U.S. Consumer Be Without a Job? And basically what it's talking about is that when you look at how companies are talking about their 2026 plans, there's not a ton of room for labor force expansion in them if you try to figure out where their profits are going to come from with their projected revenues. And so he makes the point specifically looking at housing. Home Depot gave guidance that pretty much shows no real revenue growth and only slightly better earnings growth next year. Toll Brothers, a major U.S. home builder, particularly on the high end, guided that they're going to deliver fewer homes next year and have a smaller backlog than they've had, so they're going to build less. This is stuff we've been talking about for the last couple weeks. And so, we're in this curious place where, again, like you look at the actual data that we have as it relates to, wages and what's being earned by people. And the best place that I have to find that, in real time is with the FICA withholding that is, the Treasury releases a statement every day showing, hey, here's what was paid into FICA by employers and employees. And basically what we've seen is that the pace of growth in FICA withholding year over year has gone from the mid-7s at the middle of the year down to the low 3s through November. And that's pretty consistent with no real growth in payrolls. The reason being, think about, the employer that you work for. You might be coming in this time of year and they say, hey, we're going to give you, a 3% bump in pay or a 2% bump in pay. And so 3%, payroll tax withholding growth year over year pretty much implies that there's not really any job growth that's happening. And despite this, consumer spending has remained robust. And there are reasons that we've talked about where this may be true, why this may be true. Number one, a larger portion of the population today is retired. They're not dependent on their wages. They live on Social Security and income off their portfolio.
Sure.
And Social Security doesn't get cut, it doesn't shift downward. And portfolios have been up this year, so that can support consumer spending. So I think that when you look at this, the question is, look, we're still consistently seeing across all these different platforms 4 to 6% year-over-year spending growth from American consumers. Connor's asking the question, can that continue if the labor market keeps worsening? And it's a valid question, but the data that we have in hand right now shows that at least to this point, the worsening labor market has not ended up being reflected in worsening consumer demand.
We had talked about this SOM rule concept last fall when unemployment increased by over 0.5% from the trough that it found itself in coming out of 2022, where the labor market was in a tremendous place. And typically with this SOM rule, the idea was that if you were to exceed that 0.5% increase in unemployment, that looking back in history, that would trigger a recession. At this point, given how long it's been since we last covered that, a year plus, I sit in a position where I would be more open to the idea, Chuck, that perhaps the labor market could slightly worsen next year. Now, I know the argument could be made that that's not usually how the labor market goes. It's usually not a slower worsening. It's usually, think of a snowball rolling down the hill. It goes fast and furious, and
Sure.
it's hard to stop. But I'm more open to that possibility because of the spending trends that we've examined throughout this year, which defy a lot what's going on in the labor market side. And you hit on a couple reasons as to why that's the case. Markets have been tremendous over the course of the last 3 years. For all those retirees, that's been a huge boom. And for those higher income consumers out there, they're invested in the markets too. So that also is a benefit to them. So it's a great question that he poses. And I would say on our end of things, probably one of the biggest focuses for next year is the artificial intelligence trade itself. That's powering a lot of economic growth and opportunity. And it's the labor market. If I were to narrow down two things that you're just looking at heading into 2026, those would probably be my top two.
Yeah, look, you've got this tug of war that's going to happen next year. Like these are the lines the battle lines as I see them. On the weakening side of things, you've got a labor market and a housing market that have some problems.
Right.
On the strength side of things, you've got the provisions from the One Big Beautiful Bill that are going to kick in next year that are going to be helpful, and AI continuing to power through. And the question is going to be which side gives.
Right.
Because right now, like if you look at it, you can see it's just kind of this tug of war, and there's a plausible path for the economy to worsen next year. There's a plausible path for it to get better. And I do think the window of weakness for it is in the front half of the year, because I tend to believe once you start getting larger tax refunds that are coming through and things like that, that likely starts to juice up, consumer spending heading into the summer.
But not in the fall of the following year. Yeah.
Correct. So I think that ultimately it's kind of, okay, like what does the balance between these look like? And it could be a timing thing as much as anything, where it's like, hey, the labor market was set to worsen further, but then that extra spending kicked in and kept us from going there. Or if labor goes in January, maybe it's too early and then the extra spending boost isn't enough to help.
Can I ask you one question? I know we're running up against break here. Tariff story. Do we think that's dead? Because we had really said that, hey, by December of this year, if we're not seeing impact on the pricing front, we haven't mentioned inflation as you and I have gone back and forth here for concerns for 2026. Is it dead and gone? Pretty close, I would say.
I think it is. And the reason why is that ultimately, like, all of us live and experience these things through how they change. And once they're in place for, basically a full year, you sit there and you say, okay, we've absorbed this. And now, like, that's kind of a baseline that we're competing against, relative. Look at it in terms of housing, just as an example. Housing in 2022 went from selling 6 million units a year down to around 4 million.
Mm-hmm.
Well, once you're down at $4 million and just selling that in subsequent years, it's neither a net drag or a net help for the economy. It just is steady. Yep. I kind of view the tariffs the same way in that, yeah, they were a net drag this year. They're not going to be a larger net drag next year, and so it's neutral on the economy at that point. Quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter at TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a new guide available this month titled Retirement Planning for Spouses. Mike, one of the challenges that spouses face is figuring out how to draw income in retirement and the way to optimize that income, given potentially multiple Social Security payments, portfolios, pensions. Where's a good place to start?
Yeah, of course, with a married couple, you have increased optionality about where your income comes from, which of course means increased complexity and all sorts of different decisions to be made. But yeah, first of all, you've got your Social Security. Depending on the work history of the couple, right, you might be talking about taking your own benefit. You could be taking benefits based on the working income of your spouse. There's no choice to be made there, but there is a choice to be made in terms of timing. When do we start those benefits? What's the age difference between the two of us? If there's a pension involved, what sort of survivorship benefit do we take? Do we consider life insurance as an alternative to that survivor benefit? And then, of course, your portfolio between Roth, traditional, and taxable brokerage accounts. There's a lot of decisions to be made on that side as well. So it's a lot of decision making to be made, and that's where having a good, firm plan about which income starts at what point based on our own life expectancies and taxes is really important.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Tech sector seeing a pullback again today as investors react to more tech earnings from Broadcom, which impressed, by the way. We also have some major news coming out of the retail space this morning. Right now, the Dow is off only 7 points, mostly flat. S&P 500 down 0.2% or 45 points. NASDAQ is selling off over 1% or 260 points. Russell 2000 is down over 0.25%. 10-year Treasury yield is up 1 basis point. Oh, wait, no, it's not. CNBC is doing that weird thing again. I'll get that for you later. Don't worry about it now. What do you got, Chuck?
It's up 4.3 basis points.
Thank you very much. Appreciate that. I'll never forget this. And the crude oil is down 0.6%, trading at $57.25 a barrel. Well, Broadcom is dropping 10%, despite the chipmaker beating earnings and revenue expectations driven by AI sales. The company also issued a strong forecast for the current quarter, expecting AI chip sales to double from a year earlier as AI demand remains strong. Again, Broadcom down by 10%. Meanwhile, athleisure wear retailer Lululemon announced CEO Calvin McDonald will step down in January. In a statement, Lulu said its board is focused on identifying a leader with a track record of driving companies through periods of growth and transformation to guide the company's next chapter of success. Lululemon also beat street forecasts on both lines for its previous quarter. That stock is rallying nearly 10%. Elsewhere, furniture company RH reported mixed third quarter results and narrowed its annual sales outlook toward the lower end of its range. The company noted tariffs had resulted in product delays, items out of stock, and price increases. Shares in RH are up 11%. Costco recorded higher quarterly revenue from membership fees as it aims to open more warehouses to drive growth. Costco is down nearly 1%, and several cannabis stocks are rallying following reports that President Trump is expected to direct his administration to move to reclassify marijuana as a less dangerous drug. Shares in both Tilray Brands and Canopy Growth are surging 23% higher on that news. I'm Tucker Silva, and that is Wall Street Watch. And remember, you can watch the show live every day on our YouTube page. We'll have breaking business news, and all of our content is also archived. So if you want to go see an interview or a discussion about a specific topic, it's all there with the click of a button. Just search the Financial Exchange on YouTube and hit that subscribe button.
AI shopping could drive $263 billion in holiday sales. Walmart and Target are racing to get in. That's the headline from CNBC. It's talking about global holiday sales this year, so not, in the United States. But basically, Salesforce is saying that almost a quarter of all holiday orders could be driven by AI. Now, this is going to be a very informal survey of a very small number of people. But are either of you using artificial intelligence to do your Christmas shopping this year?
No, not at all.
Am I heavily involved in Christmas shopping, like grocery shopping? No.
So the answer is a no for you.
So no.
Okay.
But no by omission because I'm just not in.
No, that's fine though. So I think I'm not either, by the way. Do either of you use AI on a regular basis right now?
Yes.
No.
Okay, good. Paul, I'll give you my examples of stuff that I tend to use it for.
Yep.
Yesterday, I had done some grocery shopping earlier this week and was going to be making some sweet potatoes yesterday. But instead, I saw some yams at the grocery store. And my 2-year-old daughter sitting in the cart heard me say the word yam, and she started going, yummy, 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 yummy. And so we had to buy the yams instead of the sweet potatoes.
Mm-hmm.
And so just before dinner last night, my wife asked me, hey, what's the difference between a yam and a sweet potato? And rather than going to Google where I would have had to find I pulled up, ChatGPT and I was like, what's the difference between this? And it gave me the 4 key differences. Yams have thicker skin. They're starchier. They're actually an entirely different family of plants from sweet potatoes, which I didn't know. But it gave me that pretty easily. Or I might ask, hey, what are the tax brackets for next year, just so I don't have to look through 8 web pages and, whatever. So I use it more for just finding basic information than making decisions about my life at this point. And I'm curious if you're similar or different.
I'm similar. The examples I would give to you are similar ones where my son, has a lot of trains around. He asks, what is this part on the train? Take a picture of it. Hey, what is this part? And I give a couple specifications there. I had a nice bottle of wine in the house that someone had left there that I opened on Sunday night. And I was like, oh, I'm not really familiar with this one. ChatGPT, here's a picture of this bottle of wine. Tell me what it's like. Give me a little bit of background on it that I wouldn't be able to grab before. All that type of stuff, workout stuff. Hey, I just ate a big Thanksgiving meal. What's a good way to try and burn some of this out? That kind of conversation. But I do think from things that I've listened to from other podcasters and people out there that it's going to get to a point, if you're looking for revenue, if you're OpenAI, this is where you clip it. And it's the same business model as Google, but
ads are coming.
Ads are coming. They're coming big time, hard and heavy, I bet. Because for the example of, let's say you want to buy your niece, this is cited in the piece here, a gift that is $50, and these are the 4 things that she likes. Give me some examples, ChatGPT, of something that would fit under these constraints. You better believe that there's going to be a link there to Walmart or Target or whatever fits the bill.
It might even just be buy right through there with an integration.
And that's what I think it's going to. I think it's going that way, and they're going to take VIG. They're going to take a commission off of the fact that they just gave Walmart or Target, whoever. And I've heard it for travel too. That's been another one that is going to come that way. Restaurant reservations. It's kind of getting to that point where it's going to act as an assistant, and that's how they will take revenue. And I sit here reading this piece, I'm like, so if you're Google, how relieved you are that you're at least in the game, because if we were having this conversation a year ago, it would not have been as optimistic of a picture, because that is their whole game, right? This is what we would do previously to answer your daughter's question about the yams or my son's about the train parts.
Google it.
That's where I would have gone.
And I do think it's also important to note, though, this is not new revenue to these companies. This is them basically trying to hold on to the revenue that would just be going through a different channel.
Yep.
So it's kind of like, hey, if you're not there, you don't have a chance.
SEO was the big term, right? Search engine optimization. Now the new one that I just read in this piece is AEO, which now I'm blanking on what the A was, but maybe let's say artificial intelligence, something along those lines. We'll go with that. You basically have to position yourself to be picked up by these searches if you want to continue to grow. That's really
AEO. Is that what you said?
Answer engine optimization.
AEIOU. It's all the vowels.
I got it. It's answer engine optimization. That's
because Google says American Eagle Outfitters.
Well, that is the ticker for.
Well, actually,
that's a ticker.
There's a song about this.
Okay.
E-I-E-I-O, and on that farm there was. No, that's not it. Anyways, here's the other question that I do have. How am I going to know I'm being advertised to by AI? Let's say, as an example, I ask, hey, what's a good, give me a list of good fast casual restaurants that I can get a meal at for under this price point. Mm-hmm. If company X is paying OpenAI Y dollars a year, is it going to say that as the first option?
Preference, right.
And is it going to have to disclose that that was a paid advertisement? Or am I just going to think, no, this is what AI is saying as the preferred option?
They'll probably have to replicate Google's playbook of, sponsored posts, which is that's the people paying to be at the top of the page, and Google's algorithm approach, which is a combination of who is doing this the best that comes up that fits the bill, but also a little bit of who's going to pay the most, that auction style system for this placement on the page.
Because the insidious thing is when you're Googling, you at least see, okay, here's these results.
Right.
If this is just, if I ask ChatGPT, hey, where should I get a steak? And it just says, oh, you should go to the Capitol Grill. How do I know that that's actually what I should do?
The best place to go, right?
You know, like, how do I know that they didn't just who owns them? It's
Darden Restaurants.
Darden. How do I know that Darden didn't just write a big old check and say, yeah, like, if asked X, respond Capitol Grill.
Mm-hmm.
So like that, because if it's just conversational, you're kind of like, okay, what do I do here? And other platforms have figured out how to deal with this. If you're on social media, which I'm not anymore, I don't really do it anymore. If you're on social media, at least the way I remember it, if someone was doing a paid ad, they indicated in the post that it was a paid ad. And so we're going to get some kind of, disclosure that needs to happen around that. But is it required by law? Is it just, no, we think this is best practice? This is where things get a little bit murky for me in trying to navigate that kind of stuff. But I thought this was, interesting. Let's take a quick break. When we come back, we're talking two things that you wouldn't think fit together: fiber and silver. And they don't fit together, but we'll discuss them together after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. the Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. If you didn't have a chance to participate in this year's race, but would still like to support our great American heroes, please visit dav5k.boston. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Okay. Piece in CNBC. Fiber, the next protein and the next grocery obsession. Apparently, this is what all the big food companies are working on. The last year or two, they've spent a whole bunch of money trying to get more protein into their food. Now they're trying to get more fiber into their food. And I got to tell you, I am very pro-fiber. Love the stuff. Eat it every day. Can't get enough of it. But here's what I know about food. I know enough to know that no one's entirely sure how the human body and digestive system actually work. And that when you take specific micronutrients out of kind of the macro picture and lifestyle from which they normally come from, you don't normally get the exact same result. And so I'm always a little bit skeptical whenever something becomes like the next big trend, because my general rule of thumb is, hey, just wait 20 years and whatever they said was bad becomes good. And so my basic starting point is, hey, don't eat too much. Try to eat a mix of different things, and, you know, you'll generally end up working out fine. But it does appear that we're about to get a real kick in the fiber next year, and so that'll be fun.
I'm all with you on fiber, though some of the areas that they plan to be launching in, I'm not sure as if this is the place I'd be looking for it. Smart Food Fiber Pop, featuring 6 grams of protein per serving. Sun Chips Fiber, incorporating fiber variants like whole grains and black beans. I don't know if those are the
I'm
places.
very pro-bean.
I'm very anti-bean.
Paul's anti-bean.
But it's a good fiber source.
I feel like we already went through this phase, by the way. Because I remember,
fiber phase?
Yeah, I feel like in like, I don't know, middle school or something, like
I know,
everything was fiber branded.
Just wait 20 years and like it all goes full circle.
Yeah.
You know, so I don't know. I am very pro-fiber, and I think it's great that you can maybe get fiber in more places, but like I remain skeptical that this is anything more than just kind of marketing, because it's, hey, we're a food company that is showing declining sales. How can we get people excited?
How can we spin it a different way?
Okay, look at all the fiber in here.
Right.
As opposed to, hey, I went to the grocery store and I bought a can of beans for $1.15, and I got all the fiber I need, and I look great.
Yes, you do.
Yes. If you're retired or getting...
What can beans do for you?
If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes, and in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or are starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your copy, call Cushing & Dolan right now at 866 848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
I do think that the bean is actually basically the ultimate food. High protein, high fiber, low glycemic index.
Which bean do you prefer?
So I've done
Pinto,
a bean taste test,
black.
actually.
Okay.
And I am very much on team kidney bean.
Okay.
Preferably the dark kidney beans.
Not in my chili, though. But keep going.
I do darks in my chili. My
the black bean?
No, my chili's dark red kidney beans and then black beans.
I'm a no bean and chili guy.
I do 2 beans in the chili.
Just 2 single beans?
Yes, 2. If you find them, you get $10. That's the goal. Is silver the new gold? This is the question that's posed by the Financial Times. Paul, have you been practicing any alchemy lately?
I haven't, but I'm so glad you guys did that bean little sidetrack because there was a tickle in my throat and I was just barely holding on. So
was
I appreciate
it a bean?
Perhaps it was.
One that didn't want to go down?
Silver has been crushing it, just absolutely crushing it this year. Gold's up 60% year to date, and silver over the last, I believe, trailing 12 months has doubled in price. And so if you're in Germany and looking forward to your collective commemorative silver coins at the Christmas issuance of the Three Wise Men, unfortunately, that has been canceled this year.
Canceled?
Because prices have swelled so much on those coins.
Why didn't they just raise the prices?
Well, they're giving them out.
Oh, they give them out?
Yes. Yeah, so they're eating the cost of the double cost.
Oh, God.
Yes.
I didn't realize that.
Germany's finance ministry took a remarkable step and canceled the long-planned Christmas issuance of the Three Wise Men. It's a commemorative silver coin and a second, less festive silver token celebrating monorails.
Monorails?
Yes.
Monorails. What is happening?
What is that?
What is happening here?
Great question.
So, yeah, look, here's the thing. I don't know anything at all about how the silver market actually functions. It is not something where I am educated in any way, shape, or form. And I know enough to know that there are plenty of different games that can be played in markets. And if you don't understand, you're best not commenting on it or participating in them. And so that's generally the way that I tend to go. Having said that, from talking with people that are more knowledgeable than myself in that area, it does seem like there is a real industrial squeeze because there just is not enough silver that's being produced, and that's driving this in addition to some retail speculation. Eventually, both of those things do end up breaking, and generally in commodity markets, those breaks don't end well, but I have no idea when, where, or how that will be. Let's take a quick break. When we return, hour 2 coming up in just a little bit.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Retirement Planning for Spouses. Mike, one of the things that I think is really important to focus on are some of the tax planning items that spouses need to consider basically every single year, especially if there are any kind of age differences between two spouses.
Yeah, real life example here. I was working with somebody recently who spouse just retired and they were trying to figure out where their income is going to come from this year, and the idea of taking some money out of the IRA came up. And so it was a decision, whose do we take it out of, whose is bigger? And the decision ultimately was, we're going to go with the older spouse here because they are going to commence their required minimum distributions earlier.
And so when you're trying to formulate those decisions, whether it's an RMD that you need to consider or potentially, Roth conversions, it's something where the decisions you make one year can have lasting impacts 10, 20 years down the road, depending on the family.
They most certainly can. Again, when you have a married couple, there's increased options in terms of what to do, but that means increased complexity. Things like the widower's tax when you lose a spouse, especially if there's a big age difference down the road. These are things that you can and should plan for because they can make an immense difference in the success of your retirement strategy.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck Paul Tucker with you here, and as we kick things off, things have gotten pretty gnarly out there in equity markets, at least. The Dow of 197 points, not too bad, less than 0.5%. But the S&P 500 now down 1.1%, about 76 points. The NASDAQ is off 475 points, down almost 2% right now. This largely on the back of another earnings report from an AI company, Broadcom in this case, yesterday, where the quarter was totally fine for them, but just some of the future guidance must have spooked markets a little bit. And so Broadcom down 11% on this news. Oracle, by the way, which was down 10% yesterday, following through being down 5% today. So has not been a good continuation for them as well. Taking a look at the bond market, the 10-year U.S. Treasury up 4.5 basis points to 4.186%. Dollar index up 0.11% to 98,455. And we've got gold up $12.40 an ounce to $43.25.40. Crude oil, West Texas Intermediate, off 34 cents a barrel down to 57.26. And we've got gas prices sliding nationally again, down another 0.8 of a cent to 2.93 and 0.2 of a cent. So gas prices continuing to fall right as we are heading into the peak of the holiday travel season. Yesterday, we covered the story that Disney was going to be investing $1 billion in OpenAI and getting a 3-year licensing agreement from OpenAI in return for about 200 so Disney characters to be able to be used in video generation and on the platform. And we looked at it and we were like, well, I looked at it and I said, man, it sure feels like you're not really protecting your intellectual property. There have been, a whole bunch of conversations about this over the last day or so. But we've got a piece in the Wall Street Journal. It's titled Behind the Deal That Took Disney from AI Skeptic to OpenAI Investor. What does it say about this deal?
Well, basically what it talks about is Bob Iger, who is set to stay with Disney through the end of 2026, had developed a relationship with Sam Altman from OpenAI through an introduction of Josh Kushner from Thrive Capital several years back. And it seems like OpenAI and Disney have been having kind of ongoing chats as the years have progressed on how to use some of this IP that Disney has. And it appears as if Disney has sort of taken its horse in the race in terms of artificial intelligence with this $1 billion equity investment, and conversely has come out at Google pretty strongly.
I do love this.
Yeah, just say, hey, we're going to throw $1 billion into your biggest competitor, and then we're going to make it really hard on you and send our lawyers at you to Google, basically saying that you're using our copyright material to train your AI systems and it violates copyrights. I mean, there is going to be a slew of these lawsuits over the course of the next few years across all IP, whether it's Disney or any other studio that you can think of, because these models are trained on this information that's out there. And it's just going to be really difficult if you're in the entertainment business to figure out how to monetize your IP. I'm sure they'll get to it, but there's going to be a lot of lawsuits before we get there.
Can we? I just want to go through that timeline on this, just between Disney and Alphabet. So, like 3 weeks ago, Disney agrees to a deal with Alphabet to get its channels back on YouTube TV. Then they sign this licensing deal with OpenAI, and immediately after doing so, sue Alphabet.
Shot across the bow.
Like, it's just you can see like exactly how they were trying to play this, and I find it kind of it's admirable in kind of a very distasteful sort of way. But in any case, my continued problem here is, look, Disney probably thinks it's trying to figure out some way to wring, some kind of money out of its IP being used in all of these AI systems. But ultimately, by participating voluntarily, they're still devaluing their own IP, in my opinion.
Because the Soro could create videos that may pick up more traction than something Disney would create, basically?
I could go, and not even more traction, it's just, look,
replicate.
If I want to make my own Star Wars fan fiction where Luke's, X-Wing gets shot down and the Death Star, wins, I can do that now.
Mm-hmm.
I don't need Disney to give me Star Wars content anymore. And I also then had the realization where, look, if all AI is going to be able to do is, if the best thing it can do is just make Mickey Mouse videos, is it really as transformative a technology as we hope it'll be? I don't know, but again, these are thoughts that just passed through my head. Let's take a quick break. When we return, we're going to be joined by Mary Burke. She is the principal economist and policy advisor with the New England Public Policy Center in the Federal Reserve Bank of Boston. Mary joins us right after this.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
Make protecting your assets easier by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets out of the nursing home and get strategies that may help reduce or even eliminate your estate taxes. Get your copy right now by calling 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, as promised, we are now joined by Mary Burke, who is a principal economist and policy advisor with the New England Public Policy Center in the Federal Reserve Bank of Boston. She's an applied economist studying the economics of health behaviors and health outcomes, education, social norms, and the gig economy. And Mary earned a BA in mathematics from Brown University and both an MA and PhD in economics from Johns Hopkins University. And she gives regular briefings on the New England economy to senior leaders with the Federal Reserve System and also to public audiences. And she joins us live now on the Financial Exchange. Mary, thanks for joining us today. We appreciate it.
Thank you very much, Chuck.
First off, let's talk a little bit about the Beige Book, because this is something that we reference on our program whenever it comes out. And I think some of our listeners might say, gee, what is that?
Mm-hmm.
So what is the Beige Book, and how does it help to inform the Fed's monetary policy making?
So the Beige Book is a Federal Reserve publication. It is released 8 times per year, and it has mostly qualitative information about each Fed district's economy. So we report on regional conditions in each Fed district. And I lead the team at the Boston Fed that produces the Beige Book for the Boston Fed District. The Boston Fed District covers most of New England, with the exception of Fairfield County, Connecticut, which is part of the New York Fed's district.
Okay.
And we speak directly with business and non-business contacts, and they tell us what's been happening in their business in recent weeks, and we report on that in the Beige Book.
And the most recent one was published in late November. And broadly speaking, what does it tell us about the state of the New England economy today?
So what happened recently, say between mid-October and late November, was that there was very slow growth in the New England economy, just a slight amount of economic expansion. So that's good. It's better than the opposite.
Sure.
But it was sluggish.
When you look at that, was that distributed, equally across different areas, or were there certain areas that were slower or faster in the growth?
Yeah, there were some mixed results. So the strongest piece was residential home sales, which were up by a decent margin from the year earlier. Consumer spending was flat, so that was kind of the weak piece. But then, say, manufacturing and non-financial services and the other industries all saw at least a little bit of growth in their revenues and activity.
Sure. One of the major stories that we've been covering throughout the last, I'd say 18 months or so, is the impact of artificial intelligence on hiring. And we've seen different studies that have shown that AI may be holding back entry-level hiring. Do you have any information on this trend, and specifically how it might be impacting recent graduates looking for those entry-level jobs in New England?
Yeah, so our evidence is anecdotal because we speak with individual contacts, so we don't have hard data on this. But we did hear that for at least some firms, entry-level hiring is being held back by AI because of increases in productivity. Firms are feeling they don't need as many entry-level employees, so there just are fewer jobs, and this means it's taking a lot longer for new college graduates to find a job. In some cases, they might have to take a job outside of their field of study, or not the job they had hoped to get. So this is a challenging situation right now for new college grads. We're not sure exactly how much of the weak labor market for new grads is related to AI, but anecdotally, we know that some of it is driven by that.
Is that happening in certain industries more than others at this point?
Again, our best evidence says it's concentrated in the tech industry, IT jobs, professional and business services, more white-collar jobs.
One of the other things that's been a major topic of discussion throughout the year is tariffs and tariff-related concerns. Do you see in the latest Beige Book tariff-related concerns continuing to show up? And in particular, how might they be affecting the New England economy today?
So tariffs are definitely mentioned. They were mentioned a lot by contacts. They've been mentioned for, throughout the year. Some said that sort of uncertainty related to tariffs went down a bit, but they're still showing up in terms of price increases. So some firms are having to mark up their prices to, cover the cost of their tariffs. Some firms have been holding back on that because of price sensitivity among consumers, but then they have to absorb those costs somehow. So this means they have to cut costs elsewhere. This has led to more cautious hiring. So part of the weak hiring, the weak labor market, is because of costs. Tariffs have driven up costs, and firms are finding other ways to cut their costs.
When we talk about how businesses may shift their pricing in response to these type of things, I know that one such business that was covered in this report was a grocery store chain that said, hey, generally we have some fairly modest price increases that we're seeing, but price of beef, we've got to mark up. Price of coffee, we've got to mark up. Cocoa, we've got to mark up. Are those tariff related? Are they related to the specific products? Like, how do we untangle what's driving this?
Yeah, so tariffs were a factor in all three of those price increases, but I would say probably not the largest factor. So there's interesting stories around each one of those commodities. With beef, The domestic herd size is the lowest it's been in 70 years. This has to do with some drought. This has to do with costs going up. And so herd sizes have been dwindling. But now we have a situation of very small herd sizes, strong demand, it turns out, related to these keto diets and paleo diets.
Sure.
Combined with tariffs on imported beef means that the domestic beef is still relatively less expensive. So you have weak supply and strong demand, and that's a recipe for very high prices.
What about on the coffee side? I'm not a coffee drinker myself. Tucker here is, he's he's been screaming about it all year.
Of coffee,
What's been going on the coffee side?
Yeah,
of things?
so coffee is also a combination. So climate change has played a role. So unpredictable weather patterns in the places that grow coffee have, again, hurt their yields. So again, you have low yields, that puts upward pressure on prices. But then there's also been tariffs on coffee, especially from Brazil. There were very high tariffs on Brazilian coffee. Now there's multiple sources of coffee, but I also buy very nice coffee beans, and I've noticed the price has definitely gone up significantly. And it can be not easy for these prices to come down if they are facing sort of longer term changes in weather patterns.
Cocoa. I got to tell you, Halloween just passed. We just went through the candy season there. Now my daughter's, we got to, bake brownies and cookies for Christmas. What's the situation with cocoa? Why are those prices moving up?
Similar to the coffee story. It's also unpredictable weather patterns related to climate change, droughts, and then excessive rain. And then another factor, turns out illegal gold mining is hurting the land used for cocoa cultivation. So just a lot of factors pressuring the supply, as well as tariffs on imported cocoa. And there's very few, it's mainly Ghana and Ivory Coast, so there aren't a lot of other places you can go for your cocoa. So, that's leading to upward pressure on those prices.
Let's talk a little bit about real estate. I know we're heading into the quiet season for real estate right now for the next, 2.5 months. But in terms of what we've been seeing in general, properties staying on the market a little bit longer, and even though the New England region still has seen price appreciation where other parts of the country have seen falling prices, are we starting to get a sense that maybe there's a change afoot in the New England housing market and maybe it's starting to tilt more towards buyers, or am I reading too much into that?
I think it's accurate that buyers are feeling a little bit more, like maybe have a little bit more bargaining power right now. What we've been seeing for the past several Beige Book reports is that the inventory of homes up for sale has been growing, and that's been really important because the inventories have been historically low, and that was part of the story of why prices were rising so fast in the region. So maybe buyers feel like they can hold out, they see more choice out there, and so they're holding out for a better deal. Also, mortgage rates came down a little bit, which helped with residential sales activity in the recent period. So prices, I'd say, are kind of leveling out, but it's, again, going to be very market specific. I don't expect a huge change right now, but I think what you said is accurate in terms of a little bit more bargaining power for the buyers.
And in terms of the impact on the regional economies, is it safe to say that the New England region is less dependent on new construction than other areas of the country for its growth?
I would say we tend to have less construction than other areas, partly because of stricter zoning regulations and maybe less available new land left to develop than in, say, the West and the South. Construction is still a decent part of our economy, but yes, because we engage in less construction, that's been a smaller share than in some other parts. But if you ask people in the housing market, they'd say they would love to see like a construction boom because there just hasn't been enough construction.
Finally, last question. We've got about 2 minutes. The Beige Book. Everyone wants to know, is there a recession coming? It seems like people want to ask that question all the time. Can the Beige Book help predict when a recession's coming?
So basically, the answer to that is yes. No one can predict a recession with certainty. So it's important to keep that in mind. I conducted some research together with Nathaniel Nelson, my colleague, and we were building on some research from the Cleveland Fed that basically fed Beige Book texts into a large language model to produce sentiment indexes. So like, how are people feeling? If you summarize the Beige Book, is it positive? Is it negative? And you can use those indexes quantitatively and relate them to recession probabilities. And it turns out that the Beige Book does a decent job. It's not 100% accurate, but historically, if you look back, when sentiment is higher, the chance of a recession is lower. When sentiment is lower, the chance of a recession goes up. We've also related this to, a lot of people use financial indicators like a yield curve to predict recessions, and that's still really valid. But we did find the Beige Book can add a little bit more or slightly different type of information than you get from those financial indicators. I would add that these forecasts are very near term. So related to are we in a recession right now, or will we be in a recession in the next 3 months?
Sure.
But any farther out from that, and then the Beige Book becomes less useful.
Very good. Well, Mary, we appreciate you joining us today. Thank you so much for taking the time to chat with us.
Thank you, Chuck. It's been a pleasure.
Again, that is Mary Burke. She's a principal economist and policy advisor with the New England Public Policy Center in the Federal Reserve Bank of Boston. We're going to take a quick break right now, but when we return, we are talking Ford and Lululemon.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick tip of the day. And today, we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There certainly is, folks. So this is a combination of things. One, you obviously want to do your basic estate planning first. Get your foundation in place, the basic revocable trust planning to help utilize whatever exemptions you don't use up through gifting. Now, when we talk about reducing the estate, we are talking about gifting. But as you said, they don't want to lose control. So there are these special trusts that are designed called spousal lifetime access trusts, where in essence, you use an LLC to keep control of the investments, manage the investments, and make distributions. And then the non-voting shares get put into these irrevocable trusts where you have each other's spouse has access to the assets. So there's a way of getting the assets into those irrevocable trusts, which are now growing outside of your estate tax free, while at the same time working together to keep control and use what's in those trusts.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes by calling 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, it looks like the tech sell-off is accelerating right around midday here as traders react to more earnings from tech, including from Broadcom, who are actually impressed on their quarterly results. We also have major news coming out of the retail world. Right now, the Dow is down over 0.5% or 261 points. S&P 500 now down 1.3% or 89 points lower. And the tech-heavy NASDAQ selling off nearly 2% now or 456 points. Russell 2000 is down 1.2%. And oil is down about 0.5%, trading at $57.33 a barrel. Broadcom dropping 10% despite the chip maker beating earnings and revenue expectations. Driven by AI sales, the company also issued a strong forecast for the current quarter, expecting AI chip sales to double from a year earlier as AI demand remains strong. Meanwhile, athleisure wear retailer Lululemon announced CEO Calvin McDonald will step down in January. Lulu said its board is focused on identifying a leader with the track record of driving companies through periods of growth and transformation to guide the company's next chapter of success. And several cannabis stocks are rallying following reports that President Trump is expected to direct his administration to move to reclassify marijuana as a less dangerous drug. Shares in both Tilray Brands and Canopy Growth are surging anywhere between 30 and 35% at the moment. I'm Tucker Silva, and that is Wall Street Watch, and we haven't done trivia yet, so let's get to it. On this day in 1980, Apple made its IPO on the stock market with shares priced at $22. Many years after Apple's IPO, it was the first company to hit the $1 trillion valuation mark. So, trivia question today, what year did Apple become the first trillion-dollar company? Once again, what year did Apple become the first trillion-dollar company? Be the fourth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 with the correct answer, and the keyword trivia will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Paul, you like skunks?
Yes, sir. No.
You're not a Pepe Le Pew fan?
I like the throwback to Lockheed Martin there that they're throwing around here.
It is. So Ford has got their they've got a secret team working at the Ford Skunk Works. Do you know where that Lockheed Martin name came from, by the way?
Oh, jeez. I I do, but I forgot.
So, 1940s, the U.S. is trying to develop its first ever jet fighter.
Yep.
Lockheed Martin is working on this, and the factory that they were trying to build the thing in stunk like something.
Oh, right.
And so they called it the Skunk Works because it smelled really bad there. So now everyone uses that whenever they have some secretive thing that they're designing. So Ford is trying to build like basically a new EV that's going to leapfrog everything that American automakers have done. And they're doing it in this secretive Skunk Works type of way. And the question is posed here by the New York Times, is it too late? And I think the answer is, well, it depends what you guys make.
Sure. It's an interesting story, and very interesting how Ford can't even walk in the doors here, Chuck. Initially, when I saw this piece, I was like, oh, geez, Ford is going to stumble and get in the way of this. But no, to the Skunk Works point, they are totally isolated off from any Ford leadership stepping in front of their doors. Internationally, it's going to be a tremendous uphill climb in order for them to get market share. As alluded to in the piece here in the New York Times, they are very concerned about the Chinese who have taken a significant market share internationally. Obviously, we don't have access here domestically to Chinese electric vehicles, so the opportunity lies here and is really, it seems to be a tremendous focus of the company, and this Ford CEO, Jim Farley, mentions it several times here. But there is an opportunity here in the United States domestically. I just wonder how you're going to compete internationally just because of how the Chinese government has subsidized that EV industry so much.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Magens Bay, or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. There's no passport needed, no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Today is that day each year where we cover Lululemon in a story, and I go to their website and tell you how expensive all of their stuff is. And I found a $78 t-shirt in my travels.
Seems reasonable.
The other thing that I found, I'm on their site, and I literally just clicked on like the men button and shirts. And I don't know how they did it, but like they've made all of their models look like mannequins, despite me being pretty sure that they're not. But like none of them look alive for some reason. And I just feel like when you're an athleisure brand, you don't want to look like you're not alive when you're modeling this stuff, but somehow they've done it, and I don't really know what to make of that. But there's this piece in Bloomberg Opinion. It's titled "Making Lululemon Cool Again Will Be a Stretch," and yes, I do see what you did there, Bloomberg. But pretty much the problem here is twofold. Lululemon is built on the idea that the brand is cool, and they're built on the idea that because they're cool, they can command premium pricing. Thus, if you are not cool, you can't command premium pricing, and that becomes a problem for you.
It just shows how difficult of a business this is to execute and be successful in for a long period of time. Because
fashion's so hard.
It's got to be one of the most difficult businesses to start and scale well. Beverages are probably up there too, but it's just something funny about that.
No, I'm just browsing their website.
Oh, okay.
Don't their people not look real?
It's not even that. It's just like, so obviously it's, customized for the holiday season, and there's a tab that says gifts under $50, and it's it's a single boxer brief for $38. 3-pack of socks for $38, a beanie for $48. Again, under $50. And a friggin' mug. That's it.
What's the
Those
mug
are the
say?
excuse me, and a belt bag if you need that.
A belt bag?
Mm-hmm.
What?
So these are the gifts under $50 from Lululemon.
You need a bag to carry your belts?
That's right.
They also have a dual pouch.
Oh, wait, no.
They also have a dual pouch wristlet.
What is a
belt?
belt?
No, it's a fanny pack. They call it an everywhere belt bag.
Oh, okay. So it's not a bag that holds
They
belts.
should just call it a fanny pack.
That's not fashionable.
An everywhere belt bag.
A belt bag.
But it's just like that's the problem with this company. Gifts under $50 and it's like barely anything. Like that's the problem with the company.
Well, I think it does go
Everything's
back to
too much.
It goes back to Chuck's point. It's too much if you're not the coolest brand out there. And the competitors have really made significant inroads against them. Are Viore and I guess Skims with the Nike launch is probably an Alo Yoga. Alo Yoga, I feel like I see everywhere now. I feel like that and Viore have sort of taken Lululemon's place. It just retail and fashion is a tough game, and they were the king of the hill for a while. But I
mean, they're still making their profits are just numbers. Their sales and profits are just kind of flattening out. It's not like the company's collapsing. So I don't want to make it sound like nobody buys their stuff anymore, but the growth rate is just kind of tapping out.
Right.
And I think it's also just, look, there's a limited pool that you can capture that can afford to buy this stuff when you're talking about a $78 t-shirt. And
I will say I have some of the dress pants. They are good quality, and they're a lot better than wearing the typical slacks.
What's it, the ABC pant or something? What's the popular one?
Yes.
Is that it?
That is correct. But those were bought for me as gifts, just so that no one starts to throw shade at me.
Sure.
For
Yeah.
They were stuffed with garlic for him.
I was literally about to say it.
Let's take a
erroneous.
Quick,
yeah. Erroneous on all counts.
Garlic cloves.
Let's take a quick break here. When we come back, Paul LaMonica from Barron's joins us after this.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818, 800-378-3818, 800-378-3818. That's 800-378-3818.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
As promised, we are joined by Paul LaMonica from Barron to talk a little bit about the housing market. Paul, thanks so much for joining us.
Thank you.
Paul, I love a great stag, and I got to say here, this piece falls into that category. Someone out there, and you are that person, is saying that, hey, maybe housing could bounce back in 2026. Whatever commentary you look at out there, whether it was the Toll Brothers' recent earnings reports that they're going to deliver less homes this year, there's just been a lot of negative sentiment. So give us some good news, some positive sentiment on a Friday. What could turn this around?
Yeah, I think we've had, obviously, the Federal Reserve cutting interest rates, and mortgage rates have come down, which in theory should make homes a little bit more affordable. Obviously, there are still concerns about prices, but you might have what Redfin is calling a normalization of prices going forward. So they're saying that next year could be the beginning of the great housing reset, which again, this is not going to be a gangbusters recovery like we saw, in the mid 2000s, and earlier this decade when housing was in a much better shape. But it could be, as they call it, a years-long period of gradual increases in home sales, which wouldn't be the worst thing in the world to have a gradual, steady rebound. And I think that the home builder stocks have been beaten up enough that you could argue that they are priced for that modest rebound and could do well next year.
You mentioned that interest rates was one lever that could be pulled on to perhaps increase demand. What are some of the other levers that Washington, D.C. or other areas of the housing market is looking to be pulled upon to perhaps kind of turn it around in 2026, Paul?
Yeah, I think some of the stimulus that we already have coming into place, from the one big beautiful bill is, a potential, boost. There's talk of, maybe tax credits for first-time buyers, more incentives for home builders to try and build more and boost supply. I think that the president and the administration are, keen on trying to get housing back on track ahead of the midterm elections. Whether or not that works obviously remains to be seen, but you have to think that they are going to, as one of my sources said, throw the kitchen sink at the problem because it's not the worst thing in the world politically to have a stronger housing market heading into some key elections next November.
In your research for this piece, Paul, what do you think would be the mortgage interest rate that would really get a lot of buyers back on the market? Is it breaking that 5% threshold, even if it was in the high fives, that would potentially turn it around or maybe increase a little bit of activity? Obviously, there's still so many people out there like myself, luckily sitting in a position where you're 3 or sub 3 on a 30-year fix, and it just makes it hard for us to get up and move.
Exactly. No, I think that is another part of the equation that doesn't get discussed as much, is that there is less incentive for people that have a home already and are paying those lower mortgage rates to try and move and find a new house that they might want to purchase, because those mortgage rates are going to be higher. I think, though, for new first-time buyers, below 6 probably is psychologically something that could seem a little more doable, coupled with the fact that you might see, prospective sellers needing to cut prices, going forward. That might make homes more affordable as well. I mean, I think a lot of homeowners, are sitting on pretty decent gains. So that's helpful if they are looking to sell. But you're right. But then the question becomes, where do you move to? And if you are looking to buy again, you're going to have a higher mortgage than the one you're probably locked into right now.
Paul LaMonica from Barron's joining us to talk about the housing market. Paul, thanks so much for the time, and have a fantastic weekend.
Thanks, and you guys.
All right, our trivia question in the previous segment was, what year did Apple become the first trillion-dollar company? Well, that would be 2018. Bill from Natick, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Bill. We play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Okay, let's see. What else do I want to cover before we finish up today? Do I want to talk about the Financial Times Person of the Year, Jensen Huang?
Just what the market's doing right now?
It's not doing anything good.
Not great.
It's bad. It's quite bad. So, look, I got to tell you, stuff like this is what gives me a little bit of agita from time to time. And that you think about the last few weeks, and in the tech space, NVIDIA reported earnings. The earnings were good. Company got sold the next day. Oracle reported earnings. Earnings were good. Company got sold the next day. Broadcom reported earnings. Earnings were good. Company got sold the next day. When companies report good news and they can't rally, it makes me perk up, because that can potentially be a turning point in markets. And I don't know if this will or won't be. Again, this market's had a number of wobbles of 3 to 5% this year, and hasn't really moved anywhere negatively since early April. But I do pay attention in particular when market leadership starts having those wobbles, because I just don't know that you can have this thing, be strong next year on the backs of like regional banks and industrial companies.
No, it's kind of a one-trick pony, the market's been. So it's going to have to be, it feels like, technological advancements or strong earnings growth from companies using artificial intelligence that would kind of get it to turn around, because it seems like NVIDIA is blowing the cover off the ball in terms of its quarterly numbers, and it's not enough to do it.
So I think that, again, this is setting up for, in my opinion, 2026 and 27, they are going to be the prove-it years for AI. Hey, you've done the build-out, you've spent all the money. Now are you going to actually get the revenue and figure out how to make that revenue profitable? And if you can't, then we're going to have to start canceling orders for all those NVIDIA chips and all that CapEx that we've planned for future years. If you can, great, the party can keep going. I don't have a dog in the fight. I don't know which way it's going to go. We had these questions heading into this year, and they answered it with, okay, we can sell to all these Middle Eastern customers, and we can, do this. How are you going to answer those questions next year? I don't know. But this is the setup. So markets remain sharply negative now. Dow's off about 0.75%. S&P down 1 1/3. NASDAQ off more than 2%. Hope you all have a great weekend. We're going to see you on Monday. We got a jobs report Tuesday. Get excited for it. We'll see you a day before then.
If you're retired or